Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005 and still alive in 2026. So today, interesting day. It's Thursday, June 4th, 2026. And the question is, I hear it everywhere, are we in a bubble? Okay, are we in a bubble? Prices going up relentlessly. This must be a bubble. We have to crash. Things are terrible. All this kind of negative news is still out there. So we will answer the question, are we in a bubble, in the main event. But first, you guys, we always take care of business. The technical picture, still bullish. Okay. I'm going to say it again, 1,000 times, bring in the moving averages. I thought today we were going to go down. Yesterday, I thought that today and going forward, we're going to go down. And we almost closed below the 10, like a couple times here. And we even touched the 20 moving average. Okay. And the 50 keeps climbing. Okay. So, guys, everything is stacked above everything, and the price is above everything, meaning all moving averages are stacked above the next moving average, and the price is above the fastest moving average, which is the 10. So, bullish. Nothing more to think about here. Okay. So, today we always pair it with the sentiment. Fear and greed. We were in neutral. We're still on the border of neutral and greed. Okay. Despite all-time highs, guys, we are at neutral border. This means a lot of fear outside this place. Okay, this is not a euphoric market by any stretch of the imagination. Yes, extreme greed in the momentum, that means we're at highs, but everything else, the strength and the breadth, is still at fear, yet people still buying a lot of call options, which is very, very strange. Okay, very, very strange that the market isn't going down. Okay, we'll see. And yet, despite this call buying, the market's not really tanking. Okay, usually it's a contrarian indicator, which leads me to suspect that this call buying is 0 DT or 1 DT. Okay, at the vast majority of it. Okay, we'll get to it soon. It still worries me. Okay, it still worries me, but that's the only extreme greed indicator we have. And bonds are saying something else because interest rates are high. Okay, so we're getting all this fear still in the market at all-time highs. So perfect. Exactly what we want as bulls. And on Thursday, we always get the AAII investor sentiment survey, which I like. Boom. We're still bearish. I mean, it went down a little bit because the market's at highs. But look at the bears, 36.3%. It's below average. We've been below average for like almost ever as this market's going up. And yet we're above average. 31% bears is the average. We're above average for the past 4 weeks. Okay, so as we're climbing a wall of worry. The bears are still there. I tell you, we haven't gotten rid of them. And this is why we're bullish. Okay, we lean bullish. I love the sentiment, how we are at neutral already. And if the market does fall, like I suspect, maybe it covers this gap here at 725, we said, this gap right here on the SPY, we'll get to extreme fear in no time. Okay, so yeah, I love the sentiment. Loving this. Loving the AAII. So it fits perfect with a bull thesis, yet it sort of, answers the questions. Are we in a bubble? Yes, it seems like we are. Maybe, we'll see. Before we get to are we in a bubble, we did get some macro indicators. Well, just one. Every Thursday, initial claims. And people are screaming that now it's 225,000, okay, as opposed to 212 anemic levels before. Look, it looks like it's climbing for the past month. Oh no, but look at it. Relatively speaking, it's nothing. Okay, if we go to a 5-year average, you see it's nothing, pretty much lows. Okay, nothing really happened. And if we go to the initial claims over time, this is from 1968 till now. Look at it. Can you see this blip right here? That's 225,000. It's nothing. Still a downtrend, still nothing. We can blow it up here. We can just look at this part and you can see past year. It's not even the highs of the past year. Okay, we went to 260,000. Here we're at 225. Okay, so perspective, initial claims, it just tells you that, there's still fear out there. People are saying, oh, initial claims are jacked up to 225,000. Relax, guys. It's just one print. Okay, and the overall trend is still nothing. People are not really filing for unemployment yet. We don't have it yet. Okay, so we're not closing at highs, but I thought it would be another down day. Okay, so let's get to the main event. Are we in a bubble? Okay, so first of all, we saw that the moving averages were trading above everything. So the momentum and the technicals are extremely bullish. Yet we are not at euphoria. We saw that fear and greed. We didn't even get to extreme greed in this up move. It was greed, but never past like the middle. We never had like extreme fear type of greed, if you will. We didn't have extreme greed, and it stayed there for like a week or at least 7 days. We're in the extreme fear, at least. Okay, and you can see here we're at still fearful levels. A lot of bears still. So does that sound like we're in a bubble? Okay, I just don't think so. I think that this whole move was fueled by SMH. The semiconductors going up, and I thought the semiconductors would tank today, and they did. They did go down, but still the uptrend is still maintained. Okay, so what we are seeing today, which I like, if you look at the heat map, is that it's the opposite of what we had yesterday. Yesterday, we had chips and defensive sectors going up, semiconductors, right here, chips I call them, okay, and the rest of the market was red, except the defensive sectors like the consumer defensives and healthcare. But now everything is green, including the defensives, and the chips are down. That sector is down, okay, and in here we have LAM, AMET, KLA. All these semiconductors are down today, which leads me to believe that there's the rotation going on outside of semiconductors, although they might still catch a bit. It's outside of the semiconductors and into the other sectors. And this breadth indicators that we saw before, still at fear, but look, this is the summation index. It's still at fear. Okay, I expect this to go to neutral and then greed as time goes on. And maybe the semiconductors will cool off. That's what I think will happen. It's like a rotation trade. Doesn't mean they tank. Just means that this market will get healthier in terms of breadth. Okay, we saw breadth before, and if you look at it, we're really, even if you look at the SPY right now, we're really not at extremes. If we go into the stock charts here, this is the New York, the oscillators, McClellan oscillators. It's another breadth indicator, and look, we're actually lower today. We're getting lower. And this is a contrarian indicator. When it gets to extremes like minus 250 or plus 250, that's when it usually rebounds and goes higher. So the market is still at highs. And look, the breadth is going lower. So it just goes to show you that, like if you look, this is just a 1 year time frame, but if we go 5 years, you see we're right in the middle. It's tough to see 5 years. But we're not at extremes. We're not at the 300 or 250 level that necessitates a bounce back. This is like, you can see it's mean reverting. Okay, this is like... what would you call it? Like the VIX volatility. It's mean reverting, but the mean reversion is to zero, okay, or flat. So let's see. Maybe you can see it better after 3 years. Yeah, you see we're at minus 67. It's nothing. We're in the middle of everything. We're not. There are no extremes. Is this bubble behavior? We're basically in the middle of any kind of like sentiment. You can see it right here in the fear and greed. We're neutral, and yet people think we're in a bubble. I don't get it. Okay, this is not .com era. Literally, the .com era was people would be, buying stocks that IPO'd that day, okay, in the market and making 100% return like in a day. Okay, that's mania. Do we have that now? We just have chips. Everything else is down. Okay, the .com boom it literally invented the day trading profession. There was no day trading before that. Okay, they invented day traders. People who thought they could trade because they bought an IPO and they made 100% in a day. They thought they were geniuses. They're just, victims of a bull market, if you will. Okay, that was a bubble, clearly, and it was in extreme greed. It was maximum euphoria. I mean, you didn't have this index that aggregated all these other sub indices into one, but yeah, you can just feel it. The sentiment was out there. That was maximum euphoria. We don't have that now. We have very, very sourpuss type of sentiment. So are we in a bubble? My answer to that is no. Okay, I just think we get rotation out of the semis and into the market. But I still hope, remember, we're still working this negative divergence. It's tough to see, but it's there. Negative divergence. It's easier to see on the SMH. Okay, you can see this. We're still lower as it's going higher. We're still lower. We haven't negated it. We're still, if you see the highs here, we're like 80. And right now we're at 73 on the RSI, and the highs before on the MACD were like 7, and we're at like 5.8. So it's lower. It's more pronounced in the semis. So we are still working negative divergence. So I still think we go down, maybe cover this gap here at 573. Who knows? Okay, I just don't know if it will play out. I just hope rotation feels like rotation is coming back into other sectors. It doesn't mean that the SPY can't go down. We might get some downward move. Okay, we're not out of the woods yet, in terms of like a correction. I still think that we get some kind of correction. I shouldn't say correction. Remember, correction is 10%. I expect some kind of viable pullback. And yet today we saw the strength in the semiconductors space. Even though the semiconductors were down, what were they down? Like 2% today? It came back strong. SMH was down at one point to like 607, and now it's at 623. Came back very strong. There is still appetite for appreciation in the SMH, okay, as well as the SPY. So is this bubble behavior? Guys, just because the price is going up doesn't necessarily mean there's a bubble. Only in retrospect we'll be able to see it. And we can pretty much see if tell like while we're in it if there's maximum euphoria. I don't see maximum euphoria out there yet. And by the way, when we do see maximum euphoria, it'll probably still continue for months. We will still get upside from like it's not just when we hit euphoria, like we hit extreme greed here. That's it, it's over, done. No, it's going to continue. You're going to have momentum piling. Everybody's going to pile in. It's going to get extreme. Okay, it could last for months after that. Okay, at least a month to two in extreme euphoric type stage. Okay, you have to have people really buying into this bull market, and we don't, because we kept saying that AAII sentiment. We have a lot of negativity out there. The bears are still out there waiting to pounce. They haven't been killed. Why are there bears? Because they see this quote unquote parabolic move and they think it's a bubble. It's not. It's not a bubble. It's just prices going high and you're not long, so you're a little bit jealous that you're not in. That's it. It's like fear of missing out, but it's not fear of missing out. It's jealousy of actually missing out. Okay, so that's it. It's not a bubble yet, guys. It's just price increasing. However, I hope that we do go down so I can buy, because this is a very, very strong bull market. And when it does go down, all the bears are going to come out. We're going to get bears at 50, 45, 50. We're going to get fear and greed at extreme fear, breadth at nothing. They're going to come out, okay? And those times are when you want to buy, okay? We're not there yet. We're just smack down in the middle. We're in neutral. So you just ride with the trend. Ride with the trend when there's confusion in there. When there's confusion, it means that you're in the middle of the distribution. Okay, like if you're in the I guess I'll have to draw it. Okay, if you're in the middle of a distribution here, we're in the middle. Okay, we're not here, and we're not here. We're in this middle area. You don't touch it. We're at the extremes. Will be at the last 2.5% or 5%, and the extremes here were in the last 2.5%. Okay, this is where we're looking at. If any kind of bounce here, any kind of craziness here, any kind of like, if I don't see extreme here, I don't care. If I don't see extremes, I don't care. We're in the middle. So whenever you're in the middle of a distribution, you go with a trend. Okay, you don't even have to know the narrative. You just go with a trend. All right? So that's it, guys. Are we in a bubble? I don't think so. Ride the trend. Go with it. Later.